Let's get more on this now with Farah Murad, a senior market analyst at Equiti Group in Dubai. Good to see you, Farah. Now, what does China's falling industrial profits signal about the state of its economy?
Thank you, Taiba, for having me. And I believe you summarized it pretty well. We're seeing a series of these declines have been there for 3 months. Okay, now we have maybe less worse data because September had a very bad one. The production fell by over 27%, the worst, as you said, since 2020. So the era remains the same. The pressures remain the same. Maybe we're moving to less worse data, but it remains in that. What's worrying me as well is profits. Profits from year to date in October, it's even worse. It's above 4%, it's 4.3%. Comparing it to September, which was at 3.5, it's showing me that profits are also declining. So deflation pressure remains a concern. I don't know if we can say that the stimulus didn't really work well. It's either didn't work well or it needs more time, and we didn't really see its huge effect till the moment.
Right, so what sectors are most affected by the ongoing economic slowdown, and where are the bright spots, if there are any?
There is. The real estate remains the major problem in the Chinese economy. Even we're seeing investment is dropping despite the stimulus in October compared to September. State-owned profits are down by over 8%. It's even worse than private companies. Now, the bright spots are foreign investment and foreign companies. They made a bit of profit, 0.9%. Manufacturing, as we discussed, if you remember before, I believe it's a very interesting sector in China we need to look at. That's a bright spot, if you would like to say. Real estate or consumption is somehow doing better, came better than expectations. So that's something also we need to maybe celebrate, if you would like to say.
And what additional measures or policies does China need in order to stabilize growth?
I mean, that's the tricky question. We're seeing stimulus, we're seeing injection of liquidity in the banks to have better credit. We're seeing some moves to support infrastructure. I believe infrastructure needs more help. Consumption needs more support. Supporting sectors that are doing well, such as manufacturing and high tech, should be even more aggressive. Maybe we need also some time to see this slow consumption picking up. Maybe we need more time, more targeted stimulus, infrastructure investment, and maybe less tax, especially for foreign investors, which might also be supporting the economy.
Okay, Farah Murad, Senior Market Analyst at Equiti Group. Thank you very much for joining us.
Thank you for having me.